What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. Make sure you hit that subscribe and notification buttons as well. Really means a lot to small YouTube channels like ours. It really helps us grow. Thanks to all those who continue to tune in. Welcome to all those who are new to the channel. If you are new to the channel, we do challenge you to go back and look at any of our videos and see how they stack up against, what came next in the market, the following day, week, month, and so on. So just talking about the videos, the nightly and weekend videos, like today's video, focus mostly on, identifying triggers and targets for trades ranging from scalps and intraday trades all the way to long-term swings or leaps. So if you want a deeper dive into exactly how we set up our charts with the broadening formations, levels of support, resistance, things of that nature, make sure you check out the bonus content on our YouTube page. I've got a couple of videos that dive deeper into that for you. And if you want more information about the STRAT, which is the base of our charting and trading method, you can find some free information, a link to a free quick reference PDF there in the description of this video. And even if you don't understand the STRAT, you don't need that to understand our price breakdowns here, but it does help out a little bit. We do suggest understanding the STRAT because it is probably the simplest way to break down price action and understand it in detail, if that makes any sense. So anyways, I encourage you to watch the full video. We go over triggers and targets on all time frames, so you get some pretty good insight there. With that, let's go ahead and take a look at the agenda for today. We will go ahead and recap the price action from Thursday, July 2nd. We had market was closed on Friday, July 3rd. We'll also look at SOXL's weekly and monthly price action, higher time frame perspective. We'll take a look at the quarter and the year as well, just because we want to make sure we have the full picture, but not a whole lot that we can really say on those two time frames right now. But anyways, we'll get back into, the market maker's expected move for the week of July 10th, and we'll talk about the triggers and targets for not only Monday, July 6th, but the full week of July 10th. We'll also review the triggers and targets for, the month, the quarter, and the year as well. So just starting with the charts on the 5-minute like we normally do, this is how we take advantage of our proven and repeatable strategy for, either early morning scalps or early entries into longer day trades. That strategy is, before the market opens, make sure you have the overnight high, overnight low, previous low a day, and previous high a day marked out on your charts. And then we just use those as kind of your guardrails or your targets once we have an opening print, right? Our opening print is the first traded price of the day, and you just look for higher lows or lower highs at or above or at or below those. So if you get higher lows at or above the opening print, then you want to look to get into calls targeting the overnight high and previous high a day. If you get lower highs at or below opening print, then we want to look to get into puts targeting overnight low and previous low a day. All right, so we've got kind of a lot of levels here on the chart today, just because Friday was a pretty big mover, and there were it was kind of a pivotal day. We opened, in or around a lot of important levels, right? So first things I want to point out here is the market maker's expected move high for the day for Friday. That's this level here with the orange. Market maker's expected move high. We've also got the quarter and the year flip, basically at the same level, right? This is where the month opened, the month of July, the opening print for the month of July, which was the opening print for the month, but also for the quarter, right? We started a new quarter this month. We also have overnight high, like we talked about previously. This would be our furthest target point for the proven and repeatable strategy. You can see this green dashed line here. That is last month's 50% level. This red dash line here is the week flip, right? This is this is the month and quarter flip. This is the week flip. So if we're above this level, the week is green. If we're below this level, the week is red. Same thing here, right? If we're above this level, the month and the quarter are green. If we're below this level, the month and the quarter are red. We've got previous low a day right here as well, right at the week flip. This purple dashed line, small dashed line here, I can barely see it. It is last week's low. We've got this orange dashed line coming through at an angle that is a daily downtrend line. We've got this blue dashed line here, which is overnight low. and then this orange dash line here, which is the market maker's low for Friday. And then finally down here, we've got this yellow dash line that is last quarter's 50% level. And the purple dash line is the market maker's expected move low for the week, right? So color themes, right? If you're new to the channel, orange is day, purple is week, and then we got this bright blue is the overnights, and then our obviously the previous low day and previous high day are orange because they're daily markers as well, right? So enough of that. Let's get into the actual price action, right? So we had the opening print that was basically, right at the week flip, just barely above. And you can see we poked down initially, right? We came down and we hit last week's low. That's this purple dash line here. We got a bounce off of last week's low. Got back the week flip back green. And we thought, let's see, we're going to attack last week's 50% or last month's 50% level, overnight high, the month and quarter flip, and the market maker's expected move high. If we do, definitely considered more bullish, right? If we bring in Thursday's price action, this is technically a lower low, right? So at least on the 5-minute, we've got this soft lower high here, right? So we had the high, came down, had a soft lower high, and now we got this lower low. So you can look at it from the perspective of, let's get the right tools out here, right? We had kind of like a broadening formation on the 15-minute that started, right? If we include, Friday's action, and we came down, made that lower broadening formation, came back up to about the 50% level and couldn't break through it and fell back down and continued to press down at the bottom of this, on the bottom broadening formation, right? So we can take that out of there, right? That's how we can look at it from a broadening formation situation, or we can look at it here as we've got a lower high, right? This high is lower than this high here after a lower low. So we got lower low, lower high. Opening print is right here. So yes, it is above it. But if you wanted to go ahead and take that trigger right here, we wouldn't shake our head at it, right? Because although it does bring a little bit of added risk, right? Because it is a lower high, but it's above the opening print. It's right at opening print, right? And we're also below some pretty good levels, right? We're below overnight high, below the month and quarter flip, below last month's 50% level. So in addition to, the lower high basically at opening print, we thought that was a pretty good target. So we went ahead and opened a position here, got some puts on SOXL. And knowing that it would be a little bit of added risk, knew that we wanted to keep a pretty tight stop on it. So we wanted to use last month's 50% and the overnight high as kind of our levels that we would go ahead and stop out at. Luckily it went in our favor, right? So we got back down below opening print, and basically the bottom kind of fell out there to get us to the overnight low. Now remember, we get lower highs that are at or above opening, lower highs that are below opening print. We want to get into puts, targeting overnight low and previous low a day, right? So considering the opening print was basically at previous low a day, kind of took that off the table as a target. But we did get, dumped straight to overnight low. And you can see we had a little bit of sideways action for about 10 minutes at that overnight low. So we went ahead and took profit on part of our position here and wanted to wait and see if would we get that bounce. Would we go down, hit market maker's expected move low? And even if we did hit market maker's expected move low, could we move through it, right? Because this market maker's expected move is just a result of the options chain, right? If you just take the at the money straddle plus the in the money strangle premiums and divide by 2, that's how you get your market maker's expected move. So it doesn't mean we have to bounce, right, or even go sideways at this level. We can go down through that level, right? And that's what happened here, right? We came down, did a little bit of playing around here, got this lower high, lower low, came in. Now we did sell off another portion of our position here where we got this higher high, but it came after a lower low. So we knew that we were getting yet another broadening formation, right? So boom, boom, right? So we sold half of our position here. So the quarter of that, the full position here. So another half of what we had left here. And then we wanted to wait and see, would we press market maker's expected move low for the week? Let's remove these just because right? We're looking at the 5, but you don't want to get sucked into just looking at one time frame, right? We come down here. This is the lower high on the 15-minute, and we went ahead and continued on down, right? So, pretty big down day. Came down here when we hit the market makers expected move low. We did go ahead and sell the rest of that position, but when we saw that the day was kind of floundering at the end, we went ahead and grabbed a few more puts, a little cheaper, not so much at the money. Like we normally are either at the money or in the money. We're a couple strikes out of the money, just to not put so much money down, right? But we do have to recognize the fact that we do seem to be turning the trend to the downside, to get to the bottom of the range at the very least, right? And that's kind of where we got to. We'll look at that here in a second, but the range that we've been in since really the beginning of June, right? So for about a month now, we've had this up and down action between like 180 and basically 300 for about a month. So we did grab like we said, a couple of puts to swing, but we do expect that there's a good probability that we bounce right on Monday, seeing as how we hit the bottom of the range. The week is set up pretty nicely for a 3-2 down, 2 up reversal. We'll see that here when we get to the higher time frame charts here in a second, but we went ahead and were able to capitalize on this downside, and recognize, yes, we're at the bottom of the range. So do we actually break through the bottom of the range this time instead of like the whole rest of the month where we bounce off the bottom of the range, and do we continue to have a bigger pullback, right? Let's look at the day chart. Actually, let's look at the 4-hour real quick, because we did get what are we doing here? Let's get right. So this is what I wanted to bring into perspective, right? Here's the run up that we've had since back in April, March, and excuse me, you can see at the top here we started to make a range, right? We're no longer just in a big uptrend. So this started way back at the beginning of June. I believe this is the first day of June. And for the full month, we've been bouncing around between 180, 185 and 270, 300, right? So and the reason why I have this as the range and not coming all the way up here is these look more like look above and fails, look below and fails, look above and fails, which you usually get with ranges, right? So we don't, the core range that we've been in is this orange box, and we've been having these look aboves and fails and look below and fail. Look above. This was a big look above. Thought we were going to continue from here, right? Because we got that higher high on the week, but ultimately ended up pulling back into this range. Got to around the 50% level of that range and bounced, and then did another look above and fail here. Here didn't even quite get to the bottom of the range before we bounced, then had another look above here and fail, and now we're back at the bottom of the range here. So is this going to be a look below and fail where we come back up into the range? Are we going to continue to truly fail and pull back here to maybe the 130 area as a level of support, right? We saw a little bounce here around 130. Do we pull back to the market makers expected move high for the year, right? You have to remember the market makers expected us to only get to 104.59 for the year. This was coming from the end of 2025, right? I got this literally the December 31st, right after, so that we would have the most accurate number we could for the beginning of the year. But obviously we've gone way above that 104 number and continue to boom up. So could we continue to pull back a little bit more? I definitely see more levels of support that we could hit. There are definitely some gaps here that could act as magnets to pull us back down to those levels. But we've got to kind of just respect the range that we've been in for the past month, and kind of at this point expect that we get another little bounce up into the range, especially with how that last 4-hour closed. It wasn't a huge candle, but it was, has more of a hammer structure, right? With the wick on the bottom, not a lot of wick on top. It's a green candle, meaning we closed above where it opened. So it would kind of lend itself to, giving another look below and fail back up into the range. But again, we've got to be patient. We don't make predictions here. We just set up triggers and targets for both sides of the equation, and whichever one triggers, we take and take it to magnitude, right? That's how we make money over here. So on the daily chart, it's kind of the same thing. Like look above and fail back in, look down, had kind of a look below here, but a real look below and fail here, back up to look above and fail, right? So we're in this range, right? So just keep that in mind. And we keep making these nested broadening formations, right? We had this initial broadening formation back, it was this in May, when we first had that little flag before that second pop that we had at the end of May. So here's the initial broadening formation, and from there we just making more broadening formations inside, right? So we don't have a trend. We've got more choppy action, right? If you look at the full time frame continuity, we don't have it. If you look towards the upper left hand of this chart here, the day, the week, the month, the quarter, and the year were all red, while the day, the week, the month, and the quarter were all red, while the year was green, which would indicate, again, more chop. When we opened at the time, the day and the week were green, and the month and the quarter were red, which again indicates more chop, right? And that's what we're getting, chop, volatility. So, nothing that's really surprising us here. Hopefully you guys have been able to catch the triggers and targets that we've been posting on the YouTube page and on X. So again, we've had a kind of a busy schedule where we haven't been able to do the videos, but we have been making sure to get out those triggers and targets for you. So do make sure you are checking for those. Now let's go ahead and get into these higher time frames. If we look at the week, again, it's the same type of thing in terms of, let's get those off of there, right? We are, kind of got this flag here. Now, this is what we talked about just not too long ago. We did get set up for the 3-2 down, possible 2 up, right? It's not the greatest setup in the fact that we would really want this to be more of a hammer. So we'd have the wick down here instead of having the big wick up here. So we'll probably have to, kind of fight the whole week in order to get up to the top and actually trigger that 2 up. And actually that 2 up is above where the market maker's expected move high is for the week. We'll see that here in a second. But we do have the opportunity for a 3-2 down, 2 up reversal to take us back up and possibly make a higher high. If we do that, we're going higher. Let's see. This is higher low, higher high, higher low, higher high, higher low. Could we make a higher high, right? So technically, we are in an uptrend on the week. It's just been a grind, right? It hasn't been up like we did, starting in April. We kind of had that up and down, gradual grind up. So again, our long-term leaps are still okay. We don't want to look at really selling those just yet, just because, again, we're in another broadening formation. Right, and we're just setting higher lows and higher highs. So the grind up trend, the daily broadening formation, you just got to kind of hang in there, right? There's not a whole lot else that we can say there. The month, we're very close to putting in a 2 down on the month. But again, is that something we need to do so that we can continue this uptrend on the month, right? We got this higher low, higher high, higher low, higher high. If we get that 2 down on the month, how far do we go? Even if we do, maybe close these 2 gaps, come down towards the bottom of May's price action, it's not the end of the world, right? Especially if we, put this 2 down in early in the month and then start to push back up to the end of the month. And then, maybe we end up with a hammer on the month, even if it's red, it's lending itself more towards this higher low, higher high continuation on the monthly, going to the upside. We've got this gap up here, pretty large gap that could act as a price magnet as well. So just keep that in mind, is just like the ones that below, where we're currently at can pull the price down, we do have a pretty big gap to the upside that could pull price back up. So again, no predictions here. It's an inside month. You don't make any moves on a one, right? So if you're trying to look at a more like midterm to long-term swing, there's nothing to do here, right? You're either already in it and enjoying this move that we had, or you're waiting for, that trigger. Do we get this 2 down hammer, and then we get the 2 up next month, and that's your trigger for the longer term? Or do we stay an inside month, and then it makes it a little bit more complicated next month, right? Because if we stay inside this month, then we have a possibility of 1 2 up 2 down, or a 1 2 down 2 up. So that would, just mean we need more patience, right? We're not hitting this big run like we did for a couple of months, which is reasonable, right? That was a huge run that we just had. So just kind of continue to digest everything, take things slowly. From the month and above, there's really not a whole lot to do, right? Keep an eye on the month just to see if we get that 2 down. But I mean, the quarter, look at this. This is huge. We're going to be inside on the quarter, probably this whole quarter, unless we get another push, right? Another higher high on the week, which would give us a new all-time high, which is definitely possible because, like we just talked about, we're making higher highs and higher lows. So we are in an uptrend. It is a grind, but this month we can't just really expect to, or this quarter we can't expect to be just like last quarter, right? So just keep keep in mind we got to have some patience here, right? The run was great. I hope you made a lot of money. But now it's time for the market to kind of digest things, and you can see there's been that rotation out of chips into other tech and other parts of really SPY really. So patience is the key. Nothing is broken down though. From a higher time perspective, quarter looked great. The year we're starting to get a lot bigger wick there, but we're only halfway through the year. We still got 6 months left, so not a whole lot more to say there. Let's just kind of jump back in at this point and take a look at, first let's take a look at the market makers expected move for the week. All right, so we can see, let's get the week up. There we go. Market makers expected move high. Let's get this all on here, right? There we go. Is 264.28. The low is 139.86. Now the way that we get that is we go over here to our options chain, and if you have Thinkorswim, or I don't know, whatever platform you use, maybe it has it broken down for you already. But if you do use Thinkorswim, you go to the options chain for this particular week, and you go over here to the right, and you'll see a number here in parentheses, a plus or minus number, right? That is the market maker's expected move, plus or minus 41,604. So plus or minus $41.61 from the close price on Friday, which is 181.47. That's how we get our market maker's expected move, right? So 181.47 plus 41.61 gives us that 264.28. 181.47 minus that 41.64, that gives us that 139.86, right? So that's how you get the market maker's expected move for the week. The other way that you can get it is if it doesn't show you here, you can take the premiums for the at the money straddle. So you can go to, right, so it'd be like 1,800 plus 2160, and you add that to the in the money, the premiums for the in the money strangle. So you add the 2085 to that and the 2055 to that. So you add those four numbers up: 2055, 2000, 2160, 2085, and you add those up and then divide by 2. You'll get this same number, 4160.4, right? So that's how you can get your market maker's expected move manually if it's not already there for you. Again, looking at the week, we have this 3-2 down. So we have the opportunity for, just like here a couple weeks ago, we had the 3-2 down, 2 up. That took us back up to the high of the 3. A little bit different setup here. We don't have the green hammer like we would, right? So just looking at an individual candle, this is definitely more bullish than this, right? So is that a little bit more telling? Does that mean we're not going to get that 1-2 down, 2 up? I'm sorry, 3-2 down, 2 up. Right. In order to get that, we'd have to come all the way back up to the top of this 2. We've got the gap here, so that could act as a magnet to bring us up. So if it does trigger, that would give us a magnitude back up here to this 302 level, so it'll be back to all-time highs. But be careful. Even if we get that trigger, if we go 2 up on the week, what happens when we close this gap? Do we close this gap and reject and push back down? That would give us obviously the 2 up for the week, and then if the next week comes and goes 2 down, do we go lower low? Because if we go 2 down, that would lock in this coming week as a lower high. And then if we get the lower low, now we're looking at lower high, lower low on the week perspective. And now we're looking at a downtrend on the week. And that's a lot different than just a downtrend on the 4 hour or the 1 hour or even the day, right? A downtrend on the week is much more significant, and where you'd probably want to, start cutting leaps. Making sure you have, either puts or you're selling calls to kind of try and make some money on that, the downside action, right? But again, lower high, lower low on the week is a lot heavier than a lower high, lower low on the day or 4 hours, something like that. So just keep that in mind. If we do go 2 down on the week, right, this is kind of like a convoluted combo 2 up, combo 2 down, right? We have this 2 up here, and then this 3 went 2 up first before coming back down and finishing red. So we have this 2 up, then a 2 up. This 3 makes it a 2 up and a 2 down. So here's your first 2 down and then your second 2 down. So combo 2 up, combo 2 down would bring you back down to the low of the 2 to the left of the first 2 up. And that would be, let's see, down here is 157.56. So trigger would be, what's this, 168.88, and the magnitude would be 157.56, right? So not a lot of magnitude there, but that could definitely happen, especially with how low we are, or how low to the bottom of the week's candle we closed, right? There's also the rule of threes, right? If you have a 3, if one side of the 3 has been breached and you break back into the 3, especially if you go below the 50% level of that 3, then more than likely the low of that 3 is going to be breached as well. So on top of the combo 2 up, 2 down, we've got the rule of threes here that could pull us down a little bit more. You can see the market maker's expected move low is down here as well. So could have a little peek through there just to reach the bottom, breach the bottom of that 3, and maybe we pop back up and into it. But you can see the market maker's expected move low is close to the low of that 3 over here too. So don't be surprised if we do come down and break that. So obviously 3, 2 down, 2 up, or the 2 down, 2 down on the week. That's kind of where we stand. The market maker's expected move high for the week would not suggest that we're going to go 2 up on the week. So don't get too far ahead of your skis with that one, right? It could just be, like we said, the gap close and a pullback for a lower high on the week, all right? Now, from a more, let's go to our shorter time frame perspective. Look at how we would attack things from, attack like the scalping perspective, early morning scalps, early entries into longer day trades, using our proven and repeatable strategy, right? So to do that, we obviously need to have our previous high day, previous low day, overnight high, and overnight low on the charts. Gotta be a little bit tougher here, right? We had a big day on Friday, right? So we've got previous high a day, previous low a day, and then as of now, the overnight high, overnight low. Obviously, once things open back up on Sunday night into Monday morning, those will change. But that's where they're at. So those are our market. What we call our 4 hour indicators or 4 hour markers, right? Overnight high, overnight low, previous high a day, previous low a day. Those are our guardrails or our targets for the proven and repeatable strategy. So let's just say, for illustration purposes, over the overnight, Sunday night into Sunday morning, we get a nice push to the upside, right? So let's say the overnight high is all the way up here. Let me get the right tool out, and let's say we open, somewhere in between that level overnight. I'm sorry, on Monday, right? So let's say we open here, this price level 1. What that does is gives us some pretty decent targets to the upside and some pretty decent targets to the downside, right? So if we open here, if we open here, then we get the, if we push up, maybe get a little rejection off of overnight high and pull back, but ultimately make a higher low at or above the opening print level, somewhere in here. Then we want to take advantage of that higher low. We want to enter calls targeting overnight high and previous high a day. Now, again, market makers expected move high is slightly below the previous high a day. So, how much can you expect to get to that previous high a day? Probably not too much, right? You're going to have to come through this daily downtrend line again. You're going to have to bust through last week's 50% level. Market makers expected move high. So, not saying it can't happen. It's just going to be a lot tougher. But if we get the right momentum, maybe some economic numbers that drop or some news or something like that to act as a catalyst for us, maybe we could reach that. But again, that move in one day would be what would be expected for the week. So even if we do reach up there, we gotta watch Tuesday. What happens then? Do we just pull back and go make a lower low? The movement on Monday being the lower high being set, that could be it. But we'll have to be patient, wait and see. Again, we don't make predictions. We just set our triggers and targets and we take them, right? So higher lows at or above opening print. You want to look to get into calls targeting overnight high, previous high a day. Lower highs, right? So if we open up, maybe we pull back, maybe we bounce off an overnight low, but ultimately make a lower high at or below opening print, then we want to look to get into puts targeting overnight low and previous low a day, right? So just keep on your toes, right? We had we're inside on the quarter, right? Testing the last quarter's 50% level. So do we fall into that lower half of last quarter, or do we get back into that upper half and start testing some of these resistance levels to try and turn those into support? That's the key. But from a scalping perspective, early morning scalp, which could turn into a longer day trade, that's what we've got. Let's kind of speed things up here and get the video moving along. From a more of a day trade perspective, we do have that green failed 2 down from Friday that we talked about, right? So that would lend itself to that we've kind of hit the bottom of this range that we've been in for the month, and we're going to go back and at least test the 50% of that. If we do get that 2 up, that first 4 hour, then it gives us that 2 down, 2 up magnitude, of course being previous high a day. So a lot of magnitude there, but a lot to fight through. Oops, let's get rid of this because we don't know where price is going to open. But so we've got a lot of magnitude to the upside. We've got a lot to fight through. Again, if we go to the downside, there is a lot of support here. If we pull back, right, this is what was resistance got turned into support. So do we keep it as support and continue the bounce to the upside? That's what it kind of looks like looking at that 4 hour candle. But again, just got to keep in mind the momentum is to the downside, or at least it was on Friday, right? You see that big candle. So just be cautious. We could continue to the downside. And let's get a cleaner chart up here for you, right? We got last month's low here. Excuse me. Like we talked about, last quarter's 50% level, and then the market makers expected move low is all the way down here as well. So the rules of 3, we got a 3 down here, a lot of momentum to the downside. So just keep in mind, even if we do push down, we are at the bottom of the range, so we could have another look below and fail to push us back in. So the name of the game right now is just staying on your toes, right? We're range trading, right? We're not trend trading. This is a range. And within the range, there are trends, shorter time frame trends. Yes, you can jump on those 4 hour, 1 hour trends. Definitely keep those in mind and use those to your advantage. But keep in mind, time frame continuity, right? If we got a conflict of time frames, even if the day and the week are green, if the month and the quarter are red, you can't really expect to get a whole lot of momentum going to the upside, really, or to the downside either. It would just indicate chop. You got to really got to wait and see when we're going to get that full time frame continuity, because it's a long way before we flip the year red, right? So we're not going to have full time frame continuity to the downside for a while. Right, it would be a lot easier to flip full time frame continuity to the upside, and when you do the simultaneous flips on multiple time frames, that's when you get those big thrusts, either up or down. And in this case, it would be up, right? So we were full time frame continuity for a couple of months. Now we dropped out of full time frame continuity. But once you pop back in, that's when a lot of people jump back in and your momentum really starts to kick in. So really want to look for that flip. Anything above 237.79, it's hard not to get bullish again. Right now we're got full time frame continuity to the upside. We're in an uptrend on the month and on the week. So what I'm trying to say is nothing is broke down yet. You know what I mean? I hope you haven't got too bearish. You may have a little bit of fear, but just realize, zoom out. We're in this zone, right? We're in this range, right? It's like I tried to illustrate for you here on this chart. We're in this range, and until we get out of the range, either make a higher low above this range or a lower high below this range, we're not going to really have a lot of direction, right? What we can say about ranges is if we do make that lower high below the range here, we should expect to double this range to the downside. So let's duplicate that, right? So that would bring us, look, that's how funny that is, right? That would bring us back down here to that 105 level, which is the market maker's expected move for the year, right? If we, let's duplicate that. If we make a higher low at or above opening print, at or above this range here, then that would obviously take us into new all-time highs, and doubling the range would take us up to probably this 350 level. So we're halfway through the year. There's not a whole lot more to say here. We've kind of been rambling on this whole time. I don't want to say rambling, but we've just been kind of saying the same thing. At this point, we're saying the same thing, right? Be patient. Things have not broken down from a higher time frame perspective. Try not to get caught up too much in that day-to-day chop, but use it to your advantage, right? Use that volatility to make money on both the upside and downside. Could be within the same day, but use that volatility to make your money on this short term until the longer term has identified what it's going to do, and then you can either add more to any calls that you may have, or get rid of those and start adding puts or and selling calls, right? But until then, we just got to stay on our toes. Looking at the let's go over to our notes here so we can just go over the cold hard numbers, looking at the triggers and targets, right? So for Monday, July 6th, there'll be 127 trading days left in 2026, and we know the close on Friday was 181.47, right? What that means is the month is red. It doesn't turn green until 237.79, and the same for the quarter, right? The start of the month was the start of a new quarter, so both of those are red at this time. The year is green. It's like we said, it's going to take a while before that would flip red. If it is going to flip red, got to get all the way back down to 45.13. So as of right now, we're looking for that simultaneous flip back into full-time frame continuity to the upside, right? Once we get above 237.79, then the year, the quarter, and the month are green. At that point, the week should be green as well. Now we're full-time frame continuity. Now we're momentum to the upside, and let's get it going again. Looking for all-time highs, right? Like we talked about earlier, the market maker's expected move for the week is 41.61, giving us expected range of 223.08 to 139.86, and we know there's a pretty big gap above at 272 to 286, and then there's multiple gaps to the downside that we've left on this big run to the upside. From the scalping perspective, we talked about higher lows at or above opening print. We want to look to get into calls, targeting overnight high and previous high day, or lower highs at or below opening print. We want to get into puts, targeting overnight low and previous low day. On the 4 hour, there is a two down continuation. That's a possibility, right? If we go below 168.88, then that triggers that two down continuation. We've got a couple of extended targets listed out here for you. If we go to the upside, we get this 2 down, 2 up triggers at 181.94, takes you to 226.13, which would then trigger a combo 2 down, 2 up. But that's really a long ways off. I'm actually going to take that one off of there. So again, 2 down, 2 up triggers at 181.94, magnitude being all the way up there at 226.13 in this shorter term downtrend that we're in right now. on the shorter time frames, right, much smaller time frames, then we know that we've got to have some intermediate targets on the way to that magnitude in case we don't actually reach that magnitude, right? So those are the intermediate targets that we have on the way to reaching magnitude. On the day chart, if we go to the downside again, it's a just continuation, two down, triggering again at that 168.88. Extended targets are listed out here for you, including that 139.86, which is the market maker's expected to move low for the week. If we go to the upside, we got the two down, two up, triggering at 246.17. Excuse me. Magnitude of the move is 272 flat. So if we really get to running, then that could be a possibility there. In the meantime, though, we do have some intermediate targets on the way to that magnitude because it is quite a distance there. And then if we do reach magnitude and just really continue to run, we've got some extended targets listed out here for you as well. Don't really expect to hit those because they're past the market maker's expected move, but we definitely have to list them out there, and we know what SOXL can do and how much it can move in just one day. So we definitely need to have those out there. On the week, again, if we go to the downside, it'll trigger a combo two down. Combo two up. Sorry, combo two down. That would trigger at 168.88. The magnitude of that move is not too much further. We're already in it. So if it were to continue, all we have to do is reach 157.56 for it to complete. And after that, there's some extended targets that we've got out here for you. To the upside, we've got a possible, like we said, 3 2 down, 2 up reversal that would trigger at 272 flat. Magnitude would be 302. Do have that intermediate target in there just in case we don't reach magnitude, right? We do have that possibility that we're going to set a lower high on the week, right? Just keep that in mind. We set the lower low on the day. Now, again, it came from the higher high, so we've got a broadening formation on the day, but it could turn into a lower low on the week, and we just have to keep that in mind. So if we don't reach magnitude on the 3 2 down, 2 up, we see 286.24 is a very reasonable point of rejection to push us back down to the downside. But should we reach the magnitude and continue on up, we've got some extended targets listed out here for you as well. Now, the month and the quarter, we're inside still, right? We haven't gone 2 up or 2 down. So the possibility for each is both out here. So we've got those listed for you on both the month and the quarter. The year, we've already triggered that 2 down, 2 up when we went above 50.76. The magnitude was 70.08. We've obviously blown way past that. So we're in the 2 down, 2 up. We're in force, right? That's key. And we've already hit many targets on the way up. At this point, we've got some pretty lofty targets here. Should we continue that trend and get back above that 302 level, that previous all-time high? But yeah, that's what we've got for today's triggers and targets going on in through the week and beyond. Try to jam in as much information as possible without taking up too much of your time. So we do hope you enjoyed today's video. If you did enjoy today's video, again, thumbs up goes a long ways. We're a small channel. We're a free channel. We don't charge anything. So in order for us to get across more people's timelines, things like likes and shares are something that we depend on. So if you did enjoy today's video, found it informational, go ahead and give it a like, maybe even share it with somebody. And, we'd very much appreciate that. We'll continue to pump these videos out daily if possible. If we're not able to pump out a video, we do continue to put out our triggers and targets. So keep your eye on any posts from us if you don't see any videos, because we do post those triggers and targets out there. But yeah, that'll kind of wrap it up for today's video. It's, got this long weekend going on. So there's still much left to it. If you're watching this Saturday, hopefully you got some fun things planned for the rest of the day. It is the holiday, so hopefully everybody does enjoy it safely, but does enjoy it. So we'll catch you back here on Monday, ready to trade. We'll kind of end it here like that. So if you have a great holiday weekend, and we look forward to trading with you in the future.